Hey there, welcome back to Stocks Library, your daily dose of stock market insights. Today, we're rolling the dice and diving into Games Workshop, the company behind Warhammer and tabletop gaming's biggest name. Is this a winning strategy for your portfolio? Let's find out. As of today, Games Workshop's stock is trading at 138.6, up 2% this month. Over the past year, it's shown resilience and staying in the range of 113.4 to 151.2. With a market cap of $4.8 billion, Games Workshop is a niche player with a dedicated fan base, but its influence extends far beyond board games. If you're not familiar, Games Workshop produces tabletop games, miniatures, and accessories. Think Warhammer 40K, a franchise with a cult following that's now making waves in streaming, merchandise, and even video games. 1. Games Workshop recently announced a licensing deal with Amazon for a Warhammer series. Big news for fans and investors alike. This could unlock significant revenue streams through media. 2. Additionally, the release of Space Marine 2, the highly anticipated sequel in their video game franchise, has been a major success, further expanding Warhammer's reach in the gaming industry. 3. Games Workshop has also joined the prestigious FTSE 100 index, marking its transition from a niche player to one of the largest and most valuable companies in the UK stock market. Why does this matter? The shift to licensing and media, combined with the success of Space Marine 2 and recognition by the FTSE 100 index, shows how Games Workshop is rapidly evolving from a niche hobby brand to a mainstream entertainment and investment powerhouse. Let's look at where the money's coming from. 1. Product sales. 70% of revenue, $378.0 million, driven by miniatures and rulebooks. 2. Licensing. 15% worth $81.9 million, with rapid growth potential from deals like Amazon. 3. Events and stores. 10%, adding $50.4 million from retail and tournaments. Overall revenue last year was $529.2 million, with a net profit of $151.2 million. A solid margin for a specialty brand. 1. Gross profit margin, 75%. That's not just good, it's exceptional. For comparison, Google's parent company, Alphabet, has a gross profit margin of about 56%. Games Workshop's ability to maintain such high margins reflects the pricing power of its Warhammer IP and its efficient production model. 2. Debt-to-equity ratio? Almost zero, meaning this company has virtually no debt. A rarity in today's market. One of Games Workshop's biggest strengths is its ownership of the Warhammer intellectual property. This isn't just a gaming brand, it's a cultural phenomenon with a loyal fan base. Warhammer's expansive lore, games, books, and miniatures create a unique ecosystem that's difficult for competitors to replicate. The IP gives Games Workshop a significant moat, allowing it to charge premium prices and dominate its niche market. With more licensing deals and media expansions on the horizon, Warhammer is poised to drive exponential growth in the years ahead. Games Workshop is unique, but let's compare it to some competitors. 1. Hasbro. Bigger in toys and games, but less specialized in niche hobbies. 2. Wizards of the Coast, a division of Hasbro. Dungeons & Dragons is a comparable brand, but it lacks the breadth of Warhammer's miniatures and media. 3. Lego. Lego partners with external brands like Star Wars, whereas Games Workshop owns its IP, keeping more of the profits. Marvel. Warhammer's Amazon deal mirrors Marvel's journey from comics to mainstream media, suggesting big potential for cross-channel growth. Over the last 5 years, Games Workshop's stock has tripled, outperforming the FTSE 250 by a wide margin. The pandemic boosted its online sales, but post-pandemic growth has been steady, with consistent demand for its products. Key catalysts. 1. The Amazon Warhammer series. If successful, it could drive merchandise and game sales. 2. Expansion into Asia, where tabletop gaming is gaining traction. 3. New product launches, including expansions for Warhammer 40K. Games Workshop is known for its consistent dividend payouts, currently offering a yield of 3.5%. This makes it a rare find, a growth stock that also pays dividends. Analysts are mixed on Games Workshop, with a consensus price target of $151.2. They see potential in its media licensing, but caution that it remains a niche player. Here's why I'm excited about Games Workshop. It's not just a gaming company, it's a storytelling and hobby empire. The Warhammer IP is the crown jewel, giving Games Workshop a competitive advantage and massive potential for future growth. With no debt, consistent dividends, and the ability to monetize its IP through new ventures, this is a unique stock. If Warhammer continues to expand as a mainstream franchise, this could be a game changer for your portfolio. So that's Games Workshop, a mix of niche dominance, media expansion, and financial stability. Are you investing in Games Workshop? Let us know in the comments below. If this video added value, give it a like, subscribe, and hit the bell for daily stock insights. Thanks for watching, and I'll see you tomorrow for another stock breakdown.